This is going to be one of the best crypto shows you're ever going to watch. Let me tell you, I've been doing this for years, and I don't think I've ever had as much brain power on one show ever since we started the channel, and maybe even since the days I was at CNBC. So it's going to be a big show, and I'll tell you why it's going to be a big show, because we got Bitcoin, and like Bitcoin's above the big range over here, right? And we saw this little trend line over here, and Bitcoin kind of broke out of the little trend line over here, and now it's coming down for the retest. And that's in a week where we finally had the first interest rate hike in 3 years. And a lot of people are saying that what Powell said after the interest rate hike is what everybody should have been listening to, and that changed everything. So today we're going to find out whether it did indeed change everything, and whether people are willing to go risk on again. And if they are willing to go risk on again, well, what the hell are they buying? Today is Friday, guys. And on Fridays, we banter. And today we are bantering with the biggest and best brains in the industry. Let's get the show on the road.
Get the fuck out of bed, bitch, go. Get up, and then they got go. Time to wake up, bitch, get up. Get up, get up.
Welcome to Banter time.
Yeah.
All right, I brought you on too soon because I just saw you in the waiting room and I saw you jamming, and I thought I must bring you on. Welcome back, guys. I'm Crypto Man Run. Today is Friday. Fridays are big days here at Banter. You know why Fridays are big days here at Banter? Because Fridays we banter, and we banter with guests. And today, not only have we got someone who broadcasts from a gym, we've got a Bloomberg a reporter correspondent. So we've got the Bloomberg reporter correspondent. We've got the creator of VoIP. We've got a Bitcoin maximalist. Guys, we have a Bitcoin maximalist. Believe it or not, we have a Bitcoin maximalist on the channel. We've got a lot going on here today. We've got a gaming specialist on here today. I think it's going to be one of the craziest shows of all time. And I must say, I'm kind of excited to be here. I'm kind of excited to be here. For those of you who are new, welcome to our channel. Subscribe. Like this content, because that's what tells the YouTube algorithm that we're here and we're alive, and that's what we rely on to get distribution. So we rely on you to get distribution, so do that. Before we carry on here, I have a big problem. I'm hoping that you guys can help me. Okay, so listen up, listen very carefully. My mother's joined Telegram. That's not the problem. She can join Telegram. Problem is she's now found the Crypto Banter Telegram group. So she joined Telegram, found the Crypto Banter Telegram group. And now after every show, she basically reviews my performance of the show and asks people questions in the Telegram group. So do me a favor, if you see it, I apologize for it profusely. I am working on getting my mother off Telegram. Don't entertain it. Don't make it worse. She's on the Telegram group. You want to join the Telegram group, there's a link below, join it, but please, don't entertain her after the show or during the show comments, please. And I apologize to any of you who've seen it. She's so proud of me. I mean, I don't know what to do. She's so proud of me. She's so proud of me. All right, let's get into the show today. Let's start degenning. Oh, people asking about Sheldon's baby. Look, last I heard, he said he's about to have a baby. They induced labor, and I haven't heard anything yet. So I don't know if we hear anything during the show, guys, let me know. But otherwise, Sheldon hasn't yet had the baby. Bitcoin trading 40,688. So not much movement. We're quickly going to look at the US markets. Not much going on. The Dow Jones up 0.23%, and the S&P 500 0.5%, and the Nasdaq up 0.7%. So not much going on in the markets. So nothing crazy going on in the markets. But this has been a big week, and I think we should start off the big week by bringing in all of our guests, because we've got a massive panel here today. So let's start off with my friend Mike McGlone from Bloomberg. Mike, welcome, buddy.
Hey, Rand. Thanks for having me. It's good to see you, and happy Friday.
Thank you, bro. And then we've got Alex Mashinsky. We all know Alex. We all love Alex. Alex is a regular on the channel. So welcome, Alex.
Hi, how's it going?
Good, man. Simon, welcome, bro.
Yeah, thanks for having me again. And everyone watch out for Rand's fake Telegram or Mum's fake Telegram account asking you to send them some Bitcoin.
It's not fake. It's not fake. No, it's real.
Wait for the fake one. I'm sure your mum's going to have an impersonator.
It's real. It's my mum on Telegram. It's my mum on Telegram reviewing my shows, bro. It's just so embarrassing. I saw it yesterday. I was like, oh, no. Speaking of embarrassing, well, I don't know if this is embarrassing at all. Actually, I think it's actually quite cool. Simon actually broadcasts from his gym. I mean, Simon does his broadcasts from his gym.
Simon Dixon here. Somebody left a comment saying
the gym,
that I shouldn't refer to our community.
Yeah, I love it. Keeping me accountable.
I love it. All right, now look, I said to you guys, this is something that you're not used to on this channel, but today on this channel we have a Bitcoin maximalist. We have a Bitcoin maximalist. Dan, welcome, bro.
Thanks for having me.
Is it fair for me to refer to you as a Bitcoin maximalist?
I mean, I could consider myself more of a Bitcoin moderate these days, but whatever you'd like to label me as, sure.
When you say a Bitcoin moderate, are Bitcoin moderates allowed to invest in other coins?
I'm a live and let live sort of approach. If people want to experiment and have fun with other things, I think they should. And I really like Bitcoin. I think it's the most important project in the space. And so that's my perspective.
Do you own any other coins?
I have owned other coins at other moments in the crypto time.
Do you own any ApeCoin?
No, I don't own any ApeCoin.
Does anybody here own any ApeCoin? No, I'm short. I went short ApeCoin just for fun. Anyway, let's get into what's going on in the markets. We've had quite a cool week on the markets, or specifically on Bitcoin. We saw a little spike in the Bitcoin price ahead of Powell's FOMC meeting on Wednesday. And we saw Bitcoin holding quite well above the 40,000 mark after Powell's guidance on Wednesday. Powell increased interest rates by 0.25%, first interest rate increase in the last 3 years. More importantly, in the guidance afterwards, or when he addressed the press afterwards, he kind of gave us some kind of clarity as to how they see the markets. What did you guys take out of what Powell said, and does it actually make a big difference to the markets? Dan, let's start with you.
Yeah, so I think that this is a very important moment where the Fed is starting to tighten, if you will. They've had very, very lax, they've engaged in huge quantitative easing programs, or not quantitative easing, but essentially programs to flood the system with liquidity. And those, they need to kind of wrangle back as inflation starts to tick up. Inflation starts to skyrocket across the board. I mean, we've seen CPI hit levels we haven't seen in over 30 to 40 years. So the Fed is looking at, okay, well, how do we tighten things up? How do we slow the acceleration of inflation? At the same time, they can't tighten things up too much. Otherwise, they risk turning pushing us into a recession or bear market.
I wouldn't like to be Powell, because he's, on the one hand, he thought he could increase interest rates by 0.25% and slam the brakes on the economy and therefore bring down the inflation rate. But I think in between the last meeting and this meeting, a war breaks out in Ukraine. Commodities go absolutely through the roof. And it feels like no matter what he would have done, unfortunately, there's no way that he can stop this upcoming inflation. So, Mike, I know that you're quite close because you're mainly in commodities, or you love the commodities world, and commodities are now going through the roof. Commodities make up a big portion of what makes up inflation. What happens next?
So, Mr. Powell has actually a very straightforward mantra right now. He has to keep jawboning. Now he's starting to raise rates, but his initial thing is to jawbone to make the markets kind of do some of the restraint for him. He has to, as Dan mentioned, he's got to restrain inflation. That's the mandate. That's what he's agreed with President Biden. But that's what his job is. So, and he's also pointed this out months ago that he's looking back at himself from the future 25 years from now. So until the stock market or risk assets go down and take away some of this inflation, he will keep jawboning. And that's the key fact that everybody in this space has to be aware of. The riskiest assets are cryptos, and they're giving back the most gains because they had the most to lose. The most significant thing is there's virtually no chance inflation is going to go down until the stock market and commodities go down. So I think Paul knows that, and he's gonna, be nice if we can get to 2% rates by the end of the year, and the stock market doesn't go down. I think what's going to happen is something more like what happened in 2008. 2000, where we just get normal mean reversion. Remember, before this year started, the stock market and commodities historically were very elevated. And I use like 5-year averages, 60-month averages, and now we're just pricking the bubble. So it's not that complicated. It's actually very straightforward. But the key thing for crypto people to understand, as we talked about this earlier, is the ones that went up the most are going down the most. Obviously, Ethereum and some of the speculative dog coins and things like that. But Bitcoin is really showing it's in transition from what was a risk asset to risk off. And, just look at NASDAQ's down 13% on the year. Bitcoin's down like 11%. But Bitcoin typically trades with 3 to 4 times the volatility of the NASDAQ. So that's divergent strength. I expect that to continue. The key thing I want to end with, we all need to be aware of this, is we're getting this narrow wedge pattern. The thing I've learned from trading, that's one thing I love about you guys. You teach me about the text. I'll teach you. To me, the key thing about trading is that typically you break out of these patterns, and oftentimes the first move is the head fake. So I hope it's down. So if Bitcoin goes to 30 grand as the market collapses, it's more likely in the back of the stock market going down. It meets buyers, receives responsive buyers, and recovers. That's kind of my base case that will happen, but I fully expect the market's going to be under pressure until we get the end of this stock bear market. And I'm calling it a bear market because people typically don't know it's a bear market until it's too late. And the cool thing you always remember of bear markets is they'll rip your face off with sharp covering rallies. That's the way they're supposed to work.
Before I get to Simon and Alex, Dan, I'm confused, and I'll tell you why I'm confused. Because to me, Bitcoin is a digital gold, and it's a digital version and a better version of gold. It always has been. But the market's pricing Bitcoin like a tech stock. Am I wrong, or is the market wrong?
That's a great question. And it's certainly been interesting to see how Bitcoin has responded to the markets and how it's become correlated and starting to decouple a little bit. But I think when we look at it at its core, Bitcoin is still perceived as a very risky sort of asset. I think folks like myself, Mike, and others identify that gold 2.0 sort of parameters that it has as a money. But I don't think that the entire world has woken up to that premise. And I think a lot of people still trade Bitcoin as if it was a more speculative or higher beta tech stock. So I think that... Go ahead.
So with gold pretty much touching all-time highs, I mean, it's there or thereabout touching all-time highs, and the NASDAQ being 20% off its all-time highs, and Bitcoin being priced like a growth stock, is that not the arbitrage? Is that not the arbitrage for us to say, look, we know fundamentally what Bitcoin is. Maybe the market doesn't know, but we know fundamentally what Bitcoin is. Is the arbitrage not to buy it now? And
I'm not sure if I'd label that as arbitrage, but certainly there is an opportunity. And Mike highlighted that if you're willing to zoom out and have a longer time preference where you look at not day-to-day movements, but look over month to month and year to year, certainly Bitcoin is maturing and being globally recognized as a gold 2.0 asset by some of the top hedge funds and wealth managers in the world. So certainly Bitcoin is on that path of transition of going to that gold 2.0, but the whole world hasn't come to realize that yet. So therein, as you mentioned, lies the opportunity. The opportunity is to buy it before the entire world starts to believe that it is a gold 2.0. And so I think that Bitcoin is very, very, I would say very, very cheaply priced. If Bitcoin is truly a contender to gold, it should be far higher from here, at least 10x higher from here, if not even magnitudes more. So yes, I think it's a great opportunity. Obviously, I've been bullish on Bitcoin for a long time. And so for me, it's something that I've been waiting to see of Bitcoin truly leaning in and owning the gold 2.0 narrative. And I would say we're very much on the beginning part of that journey.
Alex, interest rates up 0.25%. Does that make any difference? Is it going to make any dent in inflation? Can we expect anything from this?
Well, just to answer your last question, I think it's not that the market is pricing Bitcoin like a tech stock. It's that the same people who are trading tech stocks are the marginal buyers of Bitcoin. And basically the hodlers, all the people on this show are hodlers, right? So we don't trade. We don't decide what the price is. the people that decide are the same person who's trading Tesla, and when they're selling their Tesla, they're also selling their Bitcoin. So we need to shift to migrate basically to more institutional and other type of buyers to basically offset where this is coming from, where the demand is coming from. So the pricing is based on the market and not based on the marginal buyer. But as to Powell, I think, look, he's stuck between a rock and a hard place. He's trying to deflate the bubble in a controllable way. But as we know, at least the older guys on the show know that any time that the Fed tried to do that, it was a disaster. And right now, unfortunately, they don't have a choice because they're chasing the inflation. They admitted that they're late to the game. And you have you can't shut down the 9th largest economy in the world, Russia. And not that I'm siding with Russia, but we effectively went to war, shut down the 9th largest economy, confiscated their assets, right, and think that nothing bad is going to happen. So you have Corona still effectively raging in Asia, right, in China and other places. You have inflation, and you have commodity prices going through the roof. So on the other side, we do have some good news, which is basically that the West did get united and the dollar is getting stronger, which gives the Fed much more power, meaning all these countries, mostly European countries, are going to need the Fed to basically have lifelines against the dollar, and all that extends the strength and the longevity of the US dollar as a reserve currency. So that's actually very good news for us because it allows us to navigate through this upcoming recession in a much stronger way than if the dollar was weak.
So it's funny that you say that this is actually strengthens the dollar as the world's reserve currency, because last weekend I watched the Ray Dalio video, the one where he talks about, he talks about the Dutch and then the British and then the US, and he talks about how the rise and fall of these empires and their currencies. And he was kind of alluding to the fact that maybe this next run is China's run. It's quite a great video. It's got about 6.5 or 6.7 million views already. But
I totally agree with everything Ray Dalio has in that slide. I have the same slide for the last 5 years, right, showing all the empires as well. But the point is that, and I think Ray says that as well, right, that these transitions are not happening over 2 or 3 years. These are decades worth of transitioning. So I'm talking about the next 5 years, and I just don't see China. China has a lot of their own problems right now, and you can see their stock market is down more than 50%. Investment in China are coming down. We are going from global supply chains to local supply chains, right? So just in time is basically disappearing. All of that is, again, good for the United States, very bad for China. So the transition between us and China is just got extended by 20 or 30 years. That's basically what's happening. And it's good for the United States. It's bad for China and Russia.
Okay. So
and I was born in the Ukraine, so I'm cheering for all of that.
So okay, let's quickly, Simon, let's go to you and say, okay, so we had all of a sudden the Nasdaq start to recover this week. We had the Chinese stock market stage an epic recovery. I mean, I looked at the Hang Seng. Let me see if I can quickly just find the Hang Seng chart here. I don't have it here, but the Hang Seng was up, I think, 20% in the last 2 days. You've got Bitcoin up. Was there a shift to risk on, or was this just like a little relief rally?
And guys, sorry to hop in. I've got to run. See you guys. See Simon, Alex.
Next time, Dan.
See you, Mike. All right. See y'all.
Thanks.
Cheers.
All right, great to see you, Dan.
We knew Dan had a short period with us.
Okay. So I'll take the other side of that. I think that there's what the global macro trends that we're seeing at the moment is China is already the next superpower empire, but what they don't have is the dollar, and the Chinese renminbi, the yuan, is not something that's going to give it more power in the global stage. And what it is getting more power on is it's been competing with Silicon Valley in terms of its technology and its global footprint, and it's been competing with the IMF in terms of infrastructure funding and getting a strategic partnerships and relationships with countries that have been shafted by the IMF. And so China has certainly been empire building, but it doesn't have the dollar. The dollar already has such an ingrained interest in all of our central banks and global politics and global payment infrastructure that I think what we end up at the end of this is another Bretton Woods style moment. Bretton Woods 1 after the last World War was when the US dollar negotiated its power and promised to back it by gold. Bretton Woods 2 happened in 1971 when the US reneged on its agreement and said that we will no longer back it by gold. Bretton Woods 3 will be where the dollar is put at the center of the financial system, but as a central bank digital currency and a deleveraging effect. So when I look at the markets and the longer term trends, you've got interest rates going up. What will that do? Well, that's to cool down the economy, cool down inflation. But as everyone is so over indebted and over leveraged, both at the corporate level, the individual level, and the sovereign level, it exposes the weaknesses in the financial system that can lead to another 2007, 2008 style event. But this time, rather than bail out and bail in, I think you'll have Bretton Woods 3, the renegotiation of the monetary system with central bank digital currencies, and everybody that has money at a bank, they'll be downloading an app that will replace the debt-based money that they held at a bank with debt-free money. And this is a fundamental shift
What's your,
in the way
I mean, I
we
get it.
organize our economies.
I get it. What's your timeline for this? What, I mean, are you saying that this is happening in the next 3 years, or you're saying that this is another 10 years? Because I buy your school of thought, but we've been talking about this since 2015. And since 2015, we've been talking about how messed up the US economy is and how bad the dollar is and how the US has got debt that they can never repay. And today it's just an extension of that.
Yeah, you're don't bet against the Federal Reserve was the message there, because even if they're the fundamentals, and if all of the traditional tools don't work, you've got this new tool, which is debt-free money injected via a central bank digital currency. So that's a new tool to remain significant. And I think in the next 3 to 5 years, the fact that interest rates are going up right now is the moment to expose the weaknesses in the financial system, lead to some kind of systemic risk event that is then saved by central bank digital currencies. So I see this playing out in the next few years. And I think the war, the ginormous increase in the money supply, and the fact that now we've got inflation leads us to a stagflationary environment that exposes this system. So I don't see this as a long-term thing. We just got to wait for that systemic risk event and patch up the system in a disaster scenario.
All right, Mike, I'm watching.
Simon just called QE CBDC. That's what he basically is predicting. QE CBDC, right?
Yeah, a replacement of the dollar with a CBDC, which is basically a tap out of the dollar. Mike, I'm looking at the oil chart. The oil looks like it's back over $100 a barrel, back towards $105, probably indicating to us that peace in between Russia and Ukraine is a little bit further than we thought.
I don't know about peace between Russia and Ukraine, but I'm just going to point out some facts that are a bit contrary to what Simon said. First, the ability for him to say what he wants to say didn't come from Russia or China. It came from countries fighting tyranny, like my family members, my son he was a captain in the army. And I want to point out just the fact that China has probably peaked, and that showed many significant indicators. In the U.S., as Alex said, it's probably going to, I look at it 10, 20, maybe 1,000 years from now, people talk about end of empires. Well, Rome might last about 1,000 years, and we're only 200 years, maybe 300 years into this. So to me, this is a defining moment for the U.S. to just crush it, and it's happening everywhere. So first of all, look at, you mentioned crude oil. The U.S. is a net exporter. 10 years ago, we were a net importer. How did that happen? And just embracing that advancing technology. With Canada this year, in terms of liquid fuels, together there's going to be a surplus in supply of liquid fuels versus demand of about 20%. And that's before you include the price increases. That's just happening. What is China? They're a net importer. Why? They can't really embrace that intellectual property. They have to steal it. Their system does not afford it. The fact is they did take, 1 billion people out of poverty, but now they're led by a dictator. It doesn't have free flow of capital. They don't have typical systems that tell them what to do and how to do it. And it's showing up with their vaccines. They're not effective. They don't have the competition. They have to steal these kind of things. So now you see the old school Russia, as Alex could tell us, they're fighting a war of a 20th century, and the U.S. is helping with some 21st century weapons. and crushing them, like the U.S. did with Stinger missiles in Afghanistan when they tried to, that didn't work out well. This is just happening in a macro picture. What Alex says, I think, is really accelerating is you're looking at a major boom for commodities in North America. I include U.S. and Canada because of the rule of law, safe exports, and the average cost of crude oil in the U.S. to produce is about 1/3 the price on the screen. It's just going to accelerate. I come from the Corn Belt. The average price of corn right now to produce is half the price on the screen. So thank you. Unfortunately, what Russia did was horrible, but it's going to just accelerate the West, the U.S., blowing the rest of the world away in terms of advancing technology. And cryptos is part of that. You mentioned the dollar. What's the most widely traded cryptos on the planet? Crypto dollars. Why didn't the cryptos go for, why didn't these stable coins, I call them crypto dollars, why didn't they go for the yuan or the yen or the euro? Part of that's rates, but because the dollar is the dominant currency. And why? It's what Churchill said about democracy. It's the least worst. Now you expect the world to trust currencies from countries that are led by dictators, don't have generally accepting accounting principles, and there's no one's going to trust their markets until they come out and they're wide open and they're open. So I view this as a defining moment where the U.S. 5-10 years from now is going to just absolutely crush it. And anybody who doesn't follow that advancing technology, which the U.S. is doing finally with cryptos, is going to get crushed and fall behind. China's falling behind. I can show you numerous things. You can show GDP incrementally is declining. Look what's happening with they need to steal the intellectual property. They need to import crude oil. The U.S. figured that out a while ago. We don't have to import it anymore, and our demand has been declining. So,
Mike,
I just need to point that out. The dollar here is dominant; should maintain its dominance.
To strengthen what Mike just said, China just crushed their most successful companies, right? Alibaba.
Exactly. They can't.
And they punished.
It's just the beginning.
They punished success. They went to their best entrepreneurs and punished them because these entrepreneurs not necessarily agree with the government's policies, right? And the market cap of all those companies dropped by more than half. So you can't. What do you do when you do something like that's exactly what Russia did, right? And that's why Sergey Brin and everybody else and Vitalik and everybody else left Russia and came and did all of their innovation in the West.
My ancestors.
Yes.
I think the most important thing from here is the Bitcoin policy. Firstly, I do agree the dollar has a completely dominant role, and it continues to have that role. But I think we move to China being a more important economy, as well as the dollar being a very important currency, which I think creates a really interesting dynamic that we may not necessarily have seen before. The yuan being significant in the global stage, as you've all pointed out, due to its policies. But remember, those same policies will be introduced into FedCoin. FedCoin will have automated negative interest rates when it needs them. It will have removals of freedoms. It will be connected to vaccine passports. It will have a fiscal and monetary union, and it will move America more to organized in a similar environment that led to, that will be implemented into the technology.
I'm severely allergic to a CBDC for exactly those reasons. When I hear the word CBDC, I break out in hives. I'm severely allergic to it. It petrifies me that the government's going to have much more control and be able to tell me where I can be and where I can't be based on the fact that they control my wallet.
Problem solved.
Remember, Rad, most of the money today is created as a digital currency at a bank. Now we're removing that. If the banks go bust and they replace people's money with a CBDC, then that is one step removed from a free market. So the dollar becoming a CBDC is no longer the free market dollar that we've been used to.
That's not going to happen.
It's not going to happen by debt anymore.
What are euro dollars? We need to point out facts of history. Euro dollars are deposits of U.S. dollars in banks outside the U.S. They started with the Cold War because they needed to get outside U.S. banks. What are crypto dollars? The exact same thing. It's happening again. So it's just a matter of regulation. And U.S. is not going to mess this up. It doesn't have to be a CBDC. I need to finish. I used to work at a primary dealer, and I used to work at banks. They are both regulated by the government, but they're independent. That's what's happening in crypto dollars. They might be like money markets, but the fact is it's happened organically. So CBDC in the U.S. doesn't have to happen. Why do you think China is scrambling? Because the world's gone for the dollar organically through crypto dollars. You can call them stable coins, but it's already done. It's just a process of accelerating that trend.
But Mark, if we launch a CBDC, if the US launches a
you don't have to. That's the point. It's already done.
Look, there's
it's currently created by a bank. Yeah, we got private issuers, but once you have either Treasury launching their, let's call it the CBDC or the CBDC, that's a war on banks. That's a significantly different way of organizing our economy. Rather than banks creating money as debt, that's central banks creating money, injecting it into the system. And if you believe that that's going to maintain its independence from what the Treasury wants and fiscal, then I'd take the other side of that bet.
All right, Alex.
Several things. So first, most of the dollars in the world are not created by the Fed. They're created by banks, right, who issue loans. And stable coins are exactly that. These are stable coins that are issued against some other asset, right, or against collateral and so on. So the process is very, very similar. And again, the question is less about how they're created or are they good or bad, or are they going to compete with CBDCs, and more about the velocity of money, right? So is the velocity increasing or decreasing? In crypto, the velocity of the US dollar or the equivalent is over 20. In the US economy, it's 1.6, right? Go to fred.gov, you have all those numbers right there. And it's decreasing, meaning the US economy or the velocity of money in the US economy is decreasing. So if you're the Fed or if you're Treasury and you're seeing dollars being used in a much higher velocity, that is a good thing for you, not a bad thing. That's why when everybody's talking about how the government is going to shut down crypto or going to shut down, they're not going to shut it down. It's a good thing. It's an extension of US dollar.
No, they're not. But I mean, speaking of that, I think we have to talk
regulate it. Look, they want to regulate it, but they don't want to shut it down. Two different things. They want to tax it, but they don't want to shut it down.
I agree, and I think there are two schools of thoughts in the US. You have this school of thought, which I highly respected.
I am concerned that part of today's hearing will be spent disparaging cryptocurrencies and trying to draw some connection between them and Russian sanction evasions. Now, there's no sanctions regime that's completely watertight, so it's possible that there's an oligarch somewhere that may be using a variety of tools, including crypto, to try to hide some assets. But according to administration officials across multiple agencies, there's simply no evidence of cryptocurrencies being used by Russia to evade sanctions in any significant way. Just this month, FBI Director Christopher Wray told the Senate Intelligence Committee that the Russians' ability to circumvent the sanctions with cryptocurrency is probably highly overestimated, end quote. Acting FinCEN Director Him Das said, and I quote, "We have not seen widespread evasion of our sanctions using methods such as cryptocurrency," end quote. And the Director of Cybersecurity for the National Security Council said, and I quote, "The scale that Russia would need to successfully circumvent all U.S. and partners' financial sanctions would almost certainly render cryptocurrency as an ineffective primary tool for the state," end quote. So the facts are clear, and the administration has discovered this. Russia cannot meaningfully use cryptocurrencies to evade current sanctions. And while there's been virtually no evidence of that evasion taking place, Ukraine has been actively using cryptocurrencies to do tremendous good. Cryptocurrency donations for Ukraine have reached about $100 million, which has helped Ukrainians defend their country against this terrible invasion. These funds have gone towards more than 5,500 bulletproof vests. They've bought 500 helmets and over 410,000 meals, among other things. Ukraine's Deputy Minister of Digital Transformation has said that, and I quote, "Each and every helmet and vest bought via crypto donations is currently saving Ukrainian soldiers' lives." And
so that's the one side of what happened in the hearings, and then the other side of what happened in the hearings.
Mr. Levin, let's
had to be heard.
Putin's cronies, who already has $1 billion or so in crypto, that he wants to hide from the governments that are enforcing sanctions on oligarchs. Now, can this oligarch make it harder to trace his money if he hops from one blockchain to another, if he deposits those tokens into a couple of wallets that don't require him to provide identifying information, and if he uses a mixing service that launders his money with other people's money?
Thank you, Senator. So the scenario that you described, where an oligarch has $1 billion to be able to launder, requires significant amounts of liquidity to be able to obfuscate that amount of money through the use of cryptocurrency. In fact, many times we've been able to identify.
I'm sorry, let me just remind you of what my question was again. What I'm asking is about the tools that are available. Now, he may have to break it up into multiple pieces of, who knows, $100 million at a crack. But the question I'm asking is, does hopping from one blockchain to another, does depositing tokens in a couple of wallets that don't require him to provide identifying information, and does using a mixing service all make it easier for him to hide his money?
So, Senator, the answer to that question is no, because the chain hopping that occurs, you need to actually provide the tokens, which in a transparent way that allows you to move across blockchains. We've actually got software that allows you to. So you don't think
chain hopping makes it any easier to hide your money? How about depositing tokens in wallets that don't require identifying information?
You can always split the money up into wallets that don't require.
And that would help hide the money. And how about using the mixing service?
That doesn't remove the record of where the money actually sits.
But the question I'm asking is, does it make it harder to track the money?
No, so it doesn't make it harder to track the money because
using a mixing service, you're telling me, doesn't make it harder to launder money?
The daily liquidity value of mixing services globally is about $30 million.
So you might have to do this day by day?
And we have done extensive work in tracking large sums of money through mixers that have led to the arrests of people and the disruption of their activity.
I'm actually a little surprised by your answer, since you charge a lot of money to untangle and track assets through the system, and the system keeps developing more ways.
I mean, you want to try and keep a straight face, but I mean, it just becomes crazy. I mean, but that's the two sides of what you're dealing with. You got on the one side, you got Senator Toomey, and on the other side, you got Elizabeth Warren, which is like, on the one hand, they got the pro crypto, on the other hand, you got the complete against crypto.
But I think one thing I just want to add is that's part of the sloppiness of free markets and democracy that you don't see in these two major countries that are colluding together to destroy tyranny in Ukraine. But to me, this is a defining moment for cryptos. It's a defining moment for the dollar, the crude oil, and the rule of law. And I think what's happening is we're seeing that she's going to go down in history like McCarthy. We all know that. I mean, and people who voted for slavery. If you just watched the movie Lincoln, let her make that decision. But the key thing is the whole government has been motivated now by, first of all, China pushing back. That was kind of the start of this Cold War, the U.S. fighting the Cold War with China pushing back against cryptos. And now this hot war with Russia invading Ukraine. It's coming in all over because it's just historic. And I think it's a defining moment for cryptos because look what people are able to do. Something never in the past, you would have to leave with gold and your enemies would confiscate it, and you'd have to, or, there's histories of people drowning because they have too much gold in their pockets and trying to wade through water. So this is, to me, a defining moment, but it's also defining for the dollar. And it's also a key thing to point out about crude oil, like we mentioned earlier, is Russia exports all their crude oil. It's probably going to go to China now. The market's priced for a supply shock. It's probably going to get demand shock. And the producers, if you're working for investors in the U.S., are going to just crush it because they can and they're safe.
Yeah, this is Rand. This is where I do take Mike's side of the argument on the U.S. side, because if you look at what China got really wrong, I talked about some of the things it's got right, is this Bitcoin and crypto policy. So by taking all of the miners and allowing them to relocate around the world, what has China's success story been? Well, it's producing things cheaper and exporting them globally. It could produce Bitcoin cheaper than any other country in the world, and it was exporting them globally through its mining industry. And then it suddenly took that out and said, all right, we're no longer going to support that. So all of the miners scrambled around the world. The corrupt officials took their backhanders to allow certain companies to continue mining. And they lost all the data at the exchanges. So the data is what people want at the exchanges. What do they want to do? They want to detect anti-money laundering, which is all happening. If that is going to be to detect it, you need all the data at the exchanges. And they want to collect taxes, which is why they subpoena the data once they're done collecting the bad guys so that they can collect their taxes. So by getting rid of mining, getting rid of exchanges, you've given an amazing tool to the US to come in with its executive order and decides to do this right. So Ukraine legalized Bitcoin, Russia legalized Bitcoin before and during the invasion. China got the wrong side of the policy and is leasing policy documents on whether to reverse that. But what the US does from here really determines part of the geopolitical currency war here. And I do think that the US has already realized that over 16% of Americans have cryptocurrency. They've got ETFs. It's now in their pensions. Making it illegal from here is a really bad idea. They can collect the tax. They can collect the data. That's where their future gets determined now.
So Israel had a case, Alex. I don't know how much you read, how much you stay in touch with the Israeli press, but Israel had a case where I think they collected about $300 million in tax revenue from one crypto whale. And I think someone came out, and I don't know the exact story, but someone came out in Israel and said, for every day that we're not allowing our banks to accept this money, we're losing out on tax revenue. And the Bank of Israel actually came out and actually said, I think, encouraged the banks to start allowing people to bank their crypto because they realized this is the best thing in the whole world. These are people making money and we can collect taxes against it.
Yeah, the Supreme Court in Israel ruled against the banks, right? Forced the banks to open accounts and transact in crypto, and they're still evading it by doing all kind of other tricks and obstacles and finding reasons not to transact with crypto people. But again, I think, look, for every Senator Warren, there is 100 people who listen to this and go and open immediately a crypto account because when they hear people fighting against it so hardly, they say, wow, this must be something really good if I'm if the senator is objecting to it so viscerally. So I don't see any of these things slowing down adoption. I think you've seen it across many channels of how the crypto adoption is actually moving faster than internet adoption back in the early 90s. So as long as that trend continues and you have limited supply of Bitcoin and limited supply of Ethereum because of the burning that's going on, I think you will find out that prices are going higher, right? So if you look at the last few months, you might say, oh, we don't know where prices are going. But if you're looking at the next several years and you just extrapolate, okay.
Sorry, that was our sign that we need to start degenning. That was the call from the community that we need to start being a bit more degen. So Alex, finish up, and then I'm going to get you guys to degen it a little bit.
Sure. So again, look, right now the yields in DeFi are amazing, and you can't get anything close to that, and from any bank or from buying risky bonds. You're not going to get the rates that you're getting from just posting stable coins on Anchor or on some other protocol or on Celsius, right? So I think the risk
is Anchor sustainable. Alex, is Anchor sustainable? I mean, I know they keep injecting money into it. I mean, you're in the yield game. You play the yield game all day long. Is Anchor?
Yeah. No, it's a great question, and I think there's 100 different types of yield. There is the yield that Celsius produces, which comes from actual institutions and exchanges paying fees, and there is yield that comes from inflation. And all the degens who think that they're super smart need to really dig in and understand the source of yield. If the source of yield is real commerce, is real value creation, then it's sustainable. If the source of yield is just inflation, then it will go away. So I think, look, Luna and Anchor and all these platforms need to diversify their revenue base. It doesn't mean that what they're doing is bad. It just means that currently they're relying on inflation while they're building their ecosystem, while they're diversifying the sources of yield. And the question is, can you make it in a sustainable way, right? At Celsius, for example, we paid $1 billion out of fees, out of things that other people paid. And we have over 200 strategies that generate that yield. And that's what you need, right? You need a very broad diversification. So when, DeFi or futures funding or cash and carry or market making, all these things, they go on and off. when they disappear, you have something else to lean on to continue paying yield.
All right, let's get into the degen part of it. And I think the degen part of it is we have a community. The community are either invested or want to invest, and they're looking at the market and they're saying, would you be deploying money into these markets right now? Would you not be? What would you be waiting for? If you were deploying money into the markets now, where would you put your money? Would you put your money into Bitcoin? Would you put your money into altcoins? Would you put money into the stock markets? Simon, let's start with you. Would you be deploying money now? Is there a good risk reward ratio now for you to be deploying money? If not, what are you waiting for?
Yeah. Okay, well, so I've been deploying money for over a decade now, and it's worked out pretty well because every single month I buy more Bitcoin, and my commitment is to have more Bitcoin each month than I had the prior month, and that's really worked out well for me. And so for me, I ignore all the noise. I dollar cost average in. I also look to take a percentage of that and earn some yield on it. Full disclosure, I'm a shareholder in Celsius. I'm a customer of Celsius. And we've built retirement plans that also support people in getting yield through that as well together. So for me, I don't take more cash in and more cash out. I've learned through 13 years of being involved or looking at it over a decade of being involved, that I invest in the equity of exchanges. They do all the degen part, and I benefit from owning equity in those exchanges.
So you're in the gold rush. In the gold rush, you're investing in the infrastructure, in the picks and shovels.
Yeah, and the downward markets are the times when I'm really, really excited about accumulating. The upward markets are where things get a bit crazy, and I really prefer accumulating into the downward markets. But I don't distinguish. I just add each month. It's worked out for me. It's worked out for every wealthy person I know in this industry. And I know many, many traders that have been involved in the highest performing asset class in history and are broke.
So you're accumulating Bitcoin, you're accumulating exchange tokens, you're accumulating Celsius equity and tokens. What else are you accumulating?
So I have, in terms of how I think about my life, I have a diversified approach that's ready for inflation, deflation, economic growth, economic decline. I invest in gold. All my returns are made in the crypto sector and Bitcoin. But I also have a traditional portfolio that benefits from the Federal Reserve launching central bank digital currencies and the dollar still being the dominant currency in the world. So I really don't care about an outcome. And, I borrow some of Ray Dalio's principles as an any outcome portfolio so that I can just chill, I can comment, and I can benefit from all the returns being made in the Bitcoin and crypto sector.
Mike, risk on now, risk off now. If you had some money sitting on the side, would you be deploying it now, or would you be waiting a little bit before you start deploying your money?
I say listen to Simon. It's just the one lesson I've learned from the trading pitch, and Simon's right, don't trade. I've seen the deaths and divorces, suicides, and just accumulate assets that you're going to outperform. I fully expect that in Bitcoin and most cryptos, Ethereum. Some of them are a little more dicey, but I fully expect that. I fully expect that we're way overdue for a period of underperformance in the equity market, most notably the U.S. equity market. Fed's told you that. You're fighting the Fed if you're buying equities, broad mark equities, and I think gold and Bitcoin are a good pair. And I'm one of those rare people who think the U.S. long bond is probably going to continue to do what it's been doing for 40 years and drop in yield, particularly if I'm right about crude oil, which I fully expect it's going to just drop 50% and go back to where it was the last 5 years. But I think for this subject, it's my job to tell you where the markets are going. But your panelists, Alex and Simon, they're the ones who are much more successful at it, and I listen to them generally about these kind of things.
So if I look at what you're saying, it matches exactly to what CNBC did. CNBC looked at the S&P's performance after Fed cuts, all periods and hikes, and you can see that in periods where the Fed is hiking rates, the markets perform.
Ignore that. That's add into the war the greatest extension of the S&P of U.S. equities above GDP ever versus sales versus European equities ever, the most extended versus the 50-week, 60-month average in S&P 500 in 20 years, the Fed tightening and a war. I mean, that kind of stuff is just the kind of things that people use to make themselves feel better. And then they look back for years from now and realize, yeah, I should have used a little more logical forward-looking than just trying to make themselves feel good with statistics.
Hold on, delete. It's gone. Okay, Alex, would you be going a little bit more risk on now? Would you be risk off now? Where is your risk indicator? Your deployment indicator?
Yeah, so a week ago I bought some equities, just trying to catch the bottom here, but I'm selling everything. I sold yesterday. I'm going to sell the rest today. I totally agree with Mike that this is not the time to own equities. Remember, globally, it's not just the Fed. I mean, globally, central banks printed over $30 trillion, right? So nothing like it has ever happened in history, right? This is like 10 times more than anything else. Remember, 2008, we were all sweating when Congress told us that they approved $800 billion bailout. That was in B's. Now it's in T's. 30 trillion. Okay. So you can't take the past. You can't look in the back mirror and say, look, the road is so safe. There's no problems when you're about to hit the wall, right? You're going 100 miles an hour and you're about to hit the wall. So the Fed is tightening, and all this liquidity is basically, they're going to close the spigot and basically dump more on the market. What they're going to do? What is quantitative tightening? QT. It's the opposite of QE, right? Instead of buying, as of today, basically, they're selling into the market, right? So who's going to buy it? Who's going to buy all these bonds? Who's going to buy all this stuff? So I would not touch equities here. Again, I think, I bought some more Bitcoin. I continue to buy more Bitcoin.
Telling me you wouldn't, but Alex, if you're telling me you wouldn't buy equities, and we know that Bitcoin has been highly correlated to equities, and we know that the shitcoins, altcoins, are much more highly correlated to equities. What you're basically saying is, don't be in the market.
No. I think we will have decoupling, right, from the stock market. You're starting to see it already, right? We were talking about this before the show started, and Mike can give you specific numbers about, again, volatility and the performance and so on, but you can start seeing the decoupling of the market from the stock market, right? And as long as that continues to happen and you see those spreads continue to widen, it tells you with more and more conviction that we're actually, what's supposed to happen is finally happening, right? That more and more institutions, more and more hodlers are becoming the majority of the volume, of the daily volume. And because of that, you're going to see trends that are the opposite of what's happening with the stock market.
All righty, I've got to go and buy Bitcoin and sell everything else. That sort of sounds like got a lot of work to do. Guys, love you very much. Thank you. You guys have been amazing. See you guys again soon. Each one of you I want to have a different conversation with. We'll get you guys back on separately. Love you guys very much. Thank you so much, guys.
Thank you.
Take care. Thank you.
Banter fan, don't go anywhere. Don't go anywhere because we've got to talk about a lot of things. So first thing we're going to talk about is the website. We will be continuing with our giveaways on Monday. There's amazing stuff happening on the website. We have to talk about this for 1 second because I've briefed in an article that you guys all need to listen to. First thing that is on the website. I woke up this morning and I said to myself, the majority of the people in the market don't know what ApeCoin actually is. So there's been a lot of talk about ApeCoin, but what is it? Who are the ecosystem? What is it going to be used for? What are the opportunities? That article is alive on the website. I think it's amazing. Then there's an article about DAOs, also super important. Now, there's also the Morning Brew, which you got to read. It covers everything that's going to happen in the markets today. The part that I wanted to talk to you about is something else. We are massive believers in Luna. We love Luna. We spoke about Luna when it was 35 cents. We love Luna at $85 today. But there have been a lot of people taking bets against Luna. And these are not stupid people. These are smart people who've got a lot of money, who are willing to put 10, 20, $30 million on the fact that Luna, that Terra is going to depeg and that Luna is going to be lower in a year from now. So what have I done? I've tasked our team to go out and find all the negativity and write an article about the negative case for Luna. It's not because we don't like Luna, because we love Luna. But I think to be credible, because we love Luna so much, we've got to give enough airtime or the same airtime to people who are negative about Luna. So go back to the website later on today. Let us know what you think about the negative article. It's not a negative article, it's the other side of the coin. It is going to show you why there are some people that are willing to bet millions of dollars against Luna. I think that's going to be one of the more fun articles. And the reason why we wrote it is because we want to start being a little bit more neutral. In other words, saying, look, we love Luna, but there's a whole lot of people that don't love Luna, and we're going to give them a voice and we're going to let them tell us what their thing is. And I think as investors, if you want to be a better investor, then you've got to be able to listen to both sides and not to have what they call confirmation bias. Confirmation bias is where, because you hold something, you'll block out anything that's bad against it and you'll try and justify to yourself why it's amazing. So we love Luna, but let's see what the team come up with. Super excited about that. Then, oh God. Okay, remember, my mom's on Telegram. So if you want to join the after show Telegram discussion, I'm sure she'll be there. There's a link in the description to our Telegram group. Say hi to her for me. I'm not going to be there. Then if you want to, if you want to have a real after banter, go to our BBS. So it's bbs.market/banter. We're the second biggest or the first biggest BBS community in the whole world. Go and you'll see this after banter hashtag. Go and talk about the shows. Let us know what you think. Let us know what the guests thought. By being there and by posting on the BBS, you actually earn money. You earn BBS tokens. So anyone can do it and anyone earns BBS tokens and they earn this money for free. So go and do it. BBS/market posts. And then before we go, remember, you need to have a VPN if you're in crypto. It protects your crypto. It keeps it safe. If you go to the referral link below, there is a NordVPN referral link. Remember that between now and next Thursday, I'm going to give $1,000 to one lucky person that takes the VPN, and you'll be protecting your crypto at the same time. So do it. And lastly, before I let you go, the love muscle.
What's going on, Rand? Great show. I'm gonna have to rewatch it while I eat my breakfast after the show. I guess he's let me.
Bro?
Yeah, we're going to kind of go over what happened overnight with ApeCoin, kind of exactly why the surge of liquidity came in, because obviously it doubled overnight, where the valuation is now. But I also want to talk about the big week in gaming next week from the Avalanche Summit with about 10 projects slated for gaming reveals. On top of that, the Game Developer Conference out in San Francisco put on by Meta, Intel, Facebook, and with Meta being the lead head there, this is going to be metaverse centric. There's tons of crypto gaming projects out there. I will be on foot in San Francisco next week at the conference. So I'll preface everything to watch for next week, as I think the next 7 days will be huge in the world of gaming.
I'm getting the tinglies because it is the Avalanche conference next week. Remember, the Avalanche conference is going to be quite huge. Lots of stuff's going to come out of there, and the price of Avalanche has been going up. I'm also getting the tinglies because I opened a short on ApeCoin at $15. Now it's $13.50. I'm starting to get tinglies.
When I woke up this morning, it was $15 billion fully diluted. I was just
I know, and that's what I saw. And that's what I saw. And then you know what I did? I opened a short.
Yeah,
I'm starting to feel the profits.
There will be a pullback from here, right? And I do think they're deserving of a multi-billion-dollar val because of what they've done as a project. I cannot doubt that. But I think this needs to settle. And I mean, opening up a short at 15. I think,
Where would you buy this?
It's super hard. It's super hard to tell,
Rand.
We were just looking at it. I mean, we were looking at 7 yesterday. If I would have bought at 5, I would have rather bought it. I mean, I would have bought at 7 if I was looking to buy at 5. So yeah.
Well, my number is 3. 5 is the top.
Yeah, I would way rather it get back to where it was or lower before I would want to pull the trigger on this. And I mean, it might valuate right next to those galas and the sandboxes long term. It really could, based on what they do with Animoca Brands. Who knows? But I just need to let this hype settle. Right now, the liquidity on this token is the same as Bitcoin and Ethereum. It's almost running equal with the volume on Ethereum for the last 24 hours. That just won't hold up, right? But I do think it could be, Dogecoin and Shiba Inu are valuated higher. So there's so many.
This is not that. This is going down, baby. This is going down, baby. Hustle, we'll see you later, brother, man. Much love. All right, guys, we'll see you guys. Miles and I, and maybe Hustle, we'll see you on the weekend. We're going to do a call-in show for you guys at some point on the weekend. So stay tuned. We'll just do a banter. Just check in and talk about crypto. I'll see you guys again on the weekend. Until then, have fun, trade well, and be healthy, my friends. A lot of brain power today on Banter, huh? A lot of brain power.